Good morning, ladies and gentlemen. Today, the JSE Top 40 Index is down 14% from February. Fuel prices are up 56% from 2019. Inflation is going rampant across the world, and people are saying there'll be a recession, not just in South Africa, but everywhere. So, in today's episode, we're going to show you not just how to make it through, but to actually make great profits on the other side. And at the end of the video, show you all the trades we've made during this time. Welcome back to Casual Cash. I'm glad you're here on this video today. They say it takes a village to raise a child, and I think it takes a community of investors to share information and experiences to invest successfully. Many times when the world seems to be falling apart is exactly when everyone needs to come together, support each other, and work together to navigate through it. And this year, like the last and the one before, is no different. If you're a new investor or have been investing a short while, it can probably be scary to see the markets the way they are, and fear can often lead to bad decisions that can cost you money. What we do at Casual Cash is give you my thoughts and views, and of course some market data and graphs, and you can use that information how you want to make the best investing decision for yourself. That's why today I'm going to break down what's happening right now, and also why it is probably the best time since 2020 to actually invest, and what I think is a good way to invest during these times. Alright, so if you've been on the channel a while, you're probably familiar with why the markets are so bad. You can watch our last video here for a more detailed version, but for now let's do a quick recap. Simply put, economic conditions were actually way too good at the end of COVID, and this is a sharp correction. Low interest rates, high demand, and low supply caused a buying frenzy and prices to skyrocket in 2021. Now we have an economic hangover where prices went up too high, and along with the war in Ukraine, we've been sobered by high energy prices, soaring inflation, rising interest rates, and lower consumer spending, ultimately meaning less profits for the businesses we are trying to invest in. All of that is the reason you're probably seeing red in your portfolio, and why markets around the world, including South Africa, have been going down and maybe moving towards a recession. Okay, so it sounds like pretty scary stuff, but in my personal opinion, I feel the opposite. In some ways, it's actually quite exciting because of all the opportunities we're now seeing. So let me show you what I mean. This right here is a graph of the JSE's Top 40 Index, the combined share price of the biggest 40 shares on the JSE over the last 25 years. Now, tell me if you see something. If you saw that the graph has continued to go up over the 25 years, then you and I saw the same thing. Let's look a bit closer here at the last crashes and recessions we went through. So first we're going to look at the 2002 dot-com bubble, where the index went from 107 Rand to 69 Rand, a drop of 35%. 1 year later, from the bottom, it reached the 107 mark again, and 2 years from the bottom, the market had doubled to 140 Rand. Then at about 300 Rand, 5 years after the dot-com bubble, we had the 2008 mortgage financial crisis, where huge amounts of money and assets were wiped out globally. The market dropped to 165 Rand, a 45% drop, but even now it was still 140% higher than the bottom price just 5 years earlier. At any rate, just 2 years after the bottom of this hugely deep-seated financial crisis, the market was up 80% from the bottom. After that, we saw a huge bull rush or market growth for another 9 years until 2020. Every 1,000 Rand you invested in 2009 would nearly triple to 2,800 Rand by 2014. Then, of course, we had the 2020 COVID crash, where the market dropped 20% in a couple of months. Then 18 months later, the market had risen by 73% from its bottom. And that is where we find ourselves now, where in 2022, from its high, the market has dropped 14%. So when we look at this data, at this real world pieces of history, we can tell from a track record that these cycles are normal, that they happen, and in many ways they have to happen to keep things in order, but that over time the underlying issues are corrected and the market returns and continues to prosper. Most countries show the exact same thing for each of their big indexes. So there's a very well-known quote that says riches are made in recession. And the reason for that is there's often opportunities during these times that just frankly don't present themselves in normal trading times. And history has shown that if you're able to invest in the market during these times, you can make high above average gains. And our current problems of inflation and high energy prices are mostly corrected by raising interest rates and stabilizing the energy supply. But of course, the next question is, when is the right time to buy in? When is the magical bottom point that everyone is talking about? When do we invest? So let's be real. There are few, if any, people who can predict the markets. Even top economists who studied at Oxford and Yale often and frequently get it wrong, and the news will tell you different stories each time. So there's no way to tell for sure. But here on Casual Cash, I'm going to tell you my plan and show you all the trades I've made recently in rands and cents. So my plan is a simple one. I have been and I'm going to periodically and consistently buy into the market in either specific stocks or ETFs and continue to do so if it continues to go down and when it goes back up. So let's quickly look at that graph again. Basically, without knowing where the bottom will be, I'm going to pretty much look to invest here and here and here and here and here and basically all along this dip, so that when we start coming up, each of those investments will show different levels of profit, but overall it should be a very good profit as time goes on. So in my portfolio, I get dividends and income, but my basic idea is to invest a bit at the end of each month or whenever dividends come in. Okay. Now let's look at what I've bought recently and what I'm looking at. First of all, I'm looking at banks because when interest rates go up, so does the profit at the banks. So I've bought these amounts into the country's banks. Here we've got Capitec, FNB, Nedbank, and Standard Bank. I don't like apps so much, but this is also giving me the sort of banking ETF by buying multiple companies and reducing my risk. I also bought shares in Sanlam, an insurance company I really like. Then sticking with the ETF type route, I've bought into the Satrix property ETF and the dividends are really nice at around 8%. Then I also topped up my S&P 500 growth fund, which is the top American index fund similar to our JSE 40. And lastly, I've been doing a really cool experiment this year where every month I buy 100 Rand into each of the JSE Top 40, the FTSE 100, which is the UK, and the S&P 500, which is the US, since January, no matter the market, and I'm going to see what the results are at the end of the year. Basically, that means every month the market goes down, I'm able to buy in cheaper. So if you want to see how that ends up by the end of the year, feel free to subscribe to the channel. At the end of this month, I'll also be making some more purchases, which I'll share here in a video. So if you want to see that too, you're welcome to subscribe. But that's it for today's video. I hope you guys enjoyed it. If you find this helpful, a like on the video would be great. And if you want to share this with a friend, I think it's cool when we all help each other to do well together. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.